I'll be joined on stage here with our first leasing panel. It's a spotlight on leasing. Keith Perske, head of our workplace strategy group with Colliers. Evan Gallagher, our life science specialist with a strong focus on Cambridge. Caleb Hudak, suburban office, and Kristin Blount, who is our urban office specialist. With that, I'll move over as well, but I'll start off the question just about the war for talent, Keith. Lauren mentioned it, and as I walk over there, maybe you can start. Is this for real, and how long is this going to last?
Yeah, thanks. I'm glad we're starting with the people thing. I think you get the people thing right and the business thing starts to work out. There's two ways to think about this war for talent. One is the boomer generation was about 77 million people, and the millennial, the M generation, they're just a group of people, right? So that M generation is about 77 million people, and so as the boomers retire out, the backfill of those folks is going to be a one-for-one replacement. And they talked about growth. Lauren mentioned growth, and so did Bill. How do you grow if you've got one-for-one replacement? So that's going to mean that there's going to be a shortage of folks just from a pure numbers point of view. The second way to think about it is that the talent itself is important, which is mid-career technical and analytic folks. Driverless cars and other things are going to start taking jobs from underskilled folks, but that sector in itself is going to be a real tight place. And so this idea about a war for talent in Boston and across the country is a very real thing.
Kristin, what are you saying?
You know what, Jim? We're actually seeing that play out right now in with our tenant clients in the marketplace. We are what we used to see was that space was really considered a cost center, and now the approach is completely different. It's more like an asset. It's a place where companies can recruit and retain talent, can showcase their culture and their brands and things like that. So we're really seeing that play out, as Keith said.
Caleb, any thoughts on this from suburban world?
In the suburbs, we're seeing an evolution of the product type, and it's really moving to what employees want and what employers want. And I think a prime example of this is the Post in Waltham, which is a former U.S. Post Office sorting facility, which Anchorline bought recently, and in the process of delivering 430,000 feet of new tech, completely different product than we're used to seeing in New England. And they took out a central core of it, and the entry is a 30,000-foot amenity center. And we think it's that type of product which is going to keep companies in the suburbs relevant and make employees want to be there with the collaboration and amenities and all the things that you've been hearing about throughout the rest of the program.
Evan, we talked about yesterday this gig economy, the digital economy, and you had a different field for it.
Yeah, I don't think you can talk about the war for talent without talking about the gig economy. And I'll be the first to raise my hand and admit that 6 months ago, I had absolutely no idea what the gig economy even was. But then I started researching a lot about it. It's kind of like a band and a gig and all that great stuff. And at the end of the day, what fascinates me is to think about 30 to 40% of the workforce in the coming years being part-time independent contractors amazes me. And what impact that has on our society as well as our real estate is really what amazes me. And I'll ask you, Keith, because you're bopping all around the country and you have a diverse set of clients, are they talking about this shift that we're about to see?
Yeah, it's the 30 to 40% figure is staggering. But I've seen it in a lot of places, and I actually believe it. When we talk to clients about that, they're surprised as well. But the coasts have been doing that, and especially in tech, that we've got a lot of contractors, a lot of people that are not on payroll, but they are contractors. And they're running at about 30% in Silicon Valley now. So I really believe that's true, and I think it's a product of two things. One is the ability for companies to expand and contract very quickly, and also on the employee side, an ability to balance your life or work your life in a certain way and still get paid for it. So I think that there's some advantages both ways, and so I think it's a very real thing.
So in terms of the balance, co-working space, both Lauren and Bill mentioned it. Kristin, is this a new food group or is this here to stay?
Definitely a new food group and here to stay. And three things, Jim, that I think we should point out and reasons why. One is the cost of capital. Lauren also pointed out that one of the problems right now is that construction costs are really high. So in going into a WeWork space or a co-working space, these companies don't have to deploy their capital in their space. They could deploy their capital on their talent. The other thing is really flexibility. It actually gives them the opportunity to grow or contract in a way that works with their businesses as opposed to being trapped by a lease term. Now, they do trade off cost per square foot. It's a little bit more expensive. They also trade off privacy and the ability to sort of have control over data and things like that. Those are sort of issues, but they're willing to make those sacrifices.
So Keith, with someone like a Liberty Mutual, and you're a workplace strategist, when all of a sudden you hear Liberty Mutual moving into a WeWork type space, why is that happening?
Well, Kristin's right. It is about flexibility and an ability to be agile, but there's also a cultural bit as well. So one of the things that I think we can learn from a WeWorker is that they have like a cruise director. They have a community manager there that creates experiences that make being at a WeWork space sticky, and people open their wallet to pay to be there. So we can learn something from that. But the other thing is, like HSBC in Hong Kong, they've got 400 of their fintech people in a WeWork type facility because they want them rubbing elbows with other innovative fintech people. So they want to be part of that, learning from it, and also the kinds of people they want to hire want to work in those places.
Caleb, we see no co-working space to speak of in the suburbs. Is that going to change?
There's a little bit. We've got Regis. There's some other small local groups. We've tried to talk to WeWork about coming out to the suburbs. I just don't think that the volume is there for it to make sense for them. Generally, they're looking for 50,000 feet. The groups that we see in the suburbs are more like 15,000 feet. And so I unfortunately don't see WeWork coming. So it's going to revert back to the landlords and the developers to deliver the products that WeWork offers downtown in terms of tech, in terms of coffee bars, in terms of different types of amenities. And so unfortunately, no.
And Evan, you don't really have co-working space. You have more incubator space. How does that play out?
So the first point I'll make is that incubator space for life science is so much more complicated than WeWork. So I think the growth will be staggered. But I do see growth coming, and we've seen it over the second half of 2017 with My Labs and Lab Central in Cambridge and in the urban core. The pace of innovation right now in biotech is breathtaking, and this is a solution for those companies that they don't have. So we're really excited about it, and we think it's going to grow both locally and nationally, and maybe even globally in the coming years.
Let's pause and talk a little bit about what are you hearing from your clients that you're running around looking for space? What is of concern to them? Evan, I'll go back to you on this, and then bounce around.
Construction costs, no question. Our clients are frustrated. They do not want to spend their highly leveraged money on TI allowance gaps. And a little story, we have an office client in Kendall Square who got an initial budget, 11,000 square feet of $118 a square foot, non-union for a retrofit office space. They were absolutely floored, and those are the type of situations that, from a broker's perspective, we're really trying to find new ways to set our clients' expectations.
Caleb, your world?
Industrial, and not that the market is going to slow down or stop. It's if there's enough to go around. Industrial has taken off over the last year plus, and Boston is now an institutional destination. You've got groups that have been here for a long time. You've got mom and pop shops that have been in and close to the city. But now with rents pushing to $15 to $20 a foot with the urban industrial and the last mile drivers, it's forcing people to look outside their comfort zone. I think echoing what Evan said about construction costs, what suburban tenants are used to paying for rent relative to what it costs to build a building, relative to cap rates and disposition, they don't really tie together. So it's a changing market. I think it's going to grow, but there is some challenges and some people that are going to have to get their head around what's going on. And I think it's probably mostly on the tenant side.
Kristin, the urban world, what's the number one thing you're hearing from your clients?
So number one thing is really a shortage of market-ready space that is available for occupancy very quickly for these fast-moving companies, and then the prices associated with some of that space. That's a real issue for us on the urban markets.
Bill Lynch had a graphic here on traffic. talk to me about traffic. I mean, I hear it, other than the weather, people like to talk about the traffic. Kristin, I'll go back to you. You have strong opinions about this.
I do have strong opinions about this. I don't know how everybody here feels in this audience, but I can say that I think traffic is worse than it's ever been in my entire career. It is a bear getting in and around the city right now. And we all know that there are mitigation efforts that are underway, whether it's augmenting the MBTA by the extension of the Green Line and by the adding of new Red Line and Orange Line cars, or other modes of transportation like bike paths, bike sharing, added ferries, things like that. But the thing from an urban market that we worry about is, are those mitigation efforts going to catch up to the rate of growth that we're seeing in the market, or is traffic going to stump us later?
Caleb, your world?
Traffic's bad. It's been bad. I think it's always going to be bad. Someone in this room who's much smarter than me gave an example of leaving a major metropolitan city at 5 o'clock and there being no traffic on the way out. And the ultimate message is that traffic, in a strange way, is a blessing. It means that there's economy, there's business, people want to be there. So, even with the Adeline around Westwood and the work in Needham, it's going to be a factor. So I think it kind of goes to the employers and the employees to be smart and to use Uber, to take a train, to use the bikes. I haven't gone that far yet personally, but there are other opportunities and avenues. But traffic, I think everybody in this room, if we didn't have it, we probably wouldn't be here.
Evan, is it a Cambridge situation as well?
I don't think it's a big decision driver for Cambridge companies. Cambridge is congested, but I think people deal with it and they don't complain about it. I will say that with 5 million square feet of new development in the pipeline in a small area of East Cambridge, it's starting to be more and more of a topic of conversation.
An employee experience, Keith. What do people say to you as you travel the world? Is traffic more and more of a discussion point?
Yeah, and I think that's around where it is that when a workplace situation, a good workplace is about crafting experiences for employees that are sticky, engaging, and productive. And so if you focus on getting a good experience for an employee, you've got a successful workplace. But that experience starts not when you walk in the front door, but when you leave your front door of your house. So all that traffic in between your front door and our front door can be a big stress producer. And so if we're able to make location decisions and other support decisions through Uber or buses or other ways to help reduce that stress, I think that's a very important thing. It's a workplace issue, and again, it's a people issue. You get your people working well, then your business is more successful.
And Keith, I think to your point, the person who referenced the traffic, they've had a lot of success on the 495 belt, embracing the fact that people have lives outside of work and they want to get to their kids' soccer games, they want to get home to their family, and it shouldn't take an hour to do that. Right. So they've had success, and there is opportunity to create great space for great clients and tenants on the 495 belt that they don't have to deal with the brain damage of the traffic going in and out every day.
Caleb, directly to you, whether it's Bose, it's Staples, it's PTZ, what are happening to these magnificent suburban campuses that have lost their tenants that are moving downtown? What's the strategy that these owners are now thinking? It's
still early. I think if the examples of Estellas relieving Bose of their 250,000 foot long-term obligation in Westboro is an example. By converting that to lab, I think the others will do well also. The ones that we're watching specifically is PTC, 380,000 feet in Needham, and Reebok, 600,000 feet in Canton. So I think that you're going to see some of this dynamic repositioning, and you're also going to see some large companies that may be in a different line of business that come in and can make use of these incredible facilities at significantly below replacement costs.
Keith, talk a little bit about amenities. What are the top amenities people are looking to solve for as they relocate companies and they hire people?
Yeah, I think that amenities that give people back time, reduce friction, and create experiences that are compelling are the kinds of amenities worth investing in. That's what employees want. That's what landlords can invest in as well. So if you use that as your filter, things that good food, certainly workout facilities that aren't in the basement that are really nicely crafted, connecting food to meetings, those kinds of things that create good experiences are critical.
Jim, I just want to add something to that. That in 2017, the most effective activities, events that really helped with culture and branding for the landlords we work with were reoccurring events that brought people together. Lauren talked a lot about like-minded groups and how do you get them together, create community. And you think of stuff like running clubs once a week, wine events, book clubs. Bringing those people together really creates a culture that sticks.
Kristin, downtown?
Yeah, I would say to kind of give some specific examples of some of the things that you talked about, Keith. Something like 53 State Street has unbelievable outdoor space, and when we worked with the Globe, that was a critical piece of their decision-making process. And also, they've had great success in leasing up the Goodwin Proctor space. In fact, there are rumors that they have a law firm that's signed on for a large chunk of that. So we've seen a lot of success with that. 100 Summer Street Equity Office opened up a brand new state-of-the-art amenity center, including beer taps. I mean, how cool is that? 125 Summer Street has looked at, Oxford's looked at that lobby like a residential play, like a hotel lobby. So the whole hospitality piece that Keith talks about, we've seen that playing out there, with a concierge, and it's really inviting and a great place to hang out.
So final question for the audience. A year from now, 2019, we're back here. What's going to be the story in 2018 that you think they're going to hear about or you want to predict, or a headline that you think they might read? I'll start off with you, Caleb.
I think that industrial is going to remain hot. I think the spec product that was built and has been available over the last year and a half is going to be gone, and it's basically already gone. I think healthcare is going to continue to be a major driver. I think lab and tech in the suburbs is going to be a significant impact, and I think that Joe's Inc. and the projects around the suburbs, which are pushing 2 million square feet, are going to do just fine.
Evan?
The 2017, the biotech IPO market was fantastic. We don't see that slowing down in 2018. I think the big benefactor this year is going to be the 128 Central Market. There's no space in Cambridge, and I think that market is well suited to accommodate those requirements.
Kristin?
I'll end with something that Tom Hines said earlier, and that is at 2019, it would be a wonderful thing and an optimistic thought to think that in addition to the 1 million square feet that they're poking around looking at in the seaport, that Amazon's HQ2 lands here in our urban market of Boston.
And Keith, you can wrap it up.
My last one is really, it's still about the people, so I'm going to keep on harping on that one. And most companies establish a new position called the CXO, the Chief Experience Officer.
Wow. Tom, take notes. With that, I'd like to thank this Spotlight on Leasing, and I'd like to welcome